All of the top insurance agency owners understand these three secrets to scaling their business and adding not just 100, but hundreds of thousands of dollars of premium to their book of business. The first secret that they all have an understanding of is how to ethically monopolize their insurance niche. And we're going to show you here the unique math problem that you guys can use in insurance as well as in business in general to infinitely scale your business to the most profitable place that it can go. The second secret is going to be how to write your next 100K without overcoming objections in very minimum, if any, of your sales calls. And this is a lot easier than you think. The third secret that all top producers understand is how to get new clients on demand. And not only that, they don't need to ask for referrals. They don't need to beg friends, beg family members. They don't even have to leave their house. They can sit right at their desk in their home and do this like clockwork, right? So starting with number 3 being how to get new clients on demand, the only way to do this in the fashion that I described, where you're not begging friends, begging family members, you're not reaching out to people on social media, you're not making a list of people to call, to talk to, you're not doing any of that. You don't even need to leave your home to go to an appointment. The only way to do this is through paid traffic. Not only that, but paid traffic is the only infinitely scalable model to acquire clients that exists in the insurance space. Infinitely scalable, meaning that there is an unlimited amount of leverage that you can get because your leverage comes from dollars. And if you can acquire more dollars, you can acquire an unlimited amount of leverage. And once you crack the code on paid traffic, it's like turning on a fire hydrant where the only limiting factor inside a fire hydrant is what? It's the throughput. It's the amount of water that and resource that you have access to going through the fire hydrant. In this case, it's just ad dollars. That's your throughput, right? So the components of paid traffic, the most important piece here is going to be your headline. David Ogilvy, he is renowned as the father of advertising, has said this about headlines, that once you've actually written your headline, you've effectively spent 80 cents out of your advertising dollar. So you can just kiss 80% of the rest of your ad. It doesn't matter if you go film a $100,000 production ad. It looks like a movie set, well scripted, all this other type of stuff. The headline to the ad is 80% of the dollars that you're spending in your campaigns. This should be the most tested piece of ad material that you use. In fact, the ratio that we test at is effectively 25 different headlines per one singular body, being the rest of either the copy or the scripting, the image, whatever the case is. We test 25 different headlines per body. The next most important piece of your paid traffic is going to be your creatives. The way that this would break down, the most profitable creatives, they're typically either some type of product feature creative or some type of product benefit creative. All that really means is that you're highlighting a little bit of a different aspect of what you're offering in each. You're either highlighting features or you're highlighting the benefits of what your actual offer consists of. In your creative, you're going to be calling out your avatar. This is one of the keys to all successful advertising. They call out a specific avatar. Whether it's, you could apply this to any industry on the planet. If it's weight loss, you could be talking to 35-year-olds who want to be summer ready and look like they were 18 again, right? That's calling out your avatar. And there are a lot of different specific avatars that exist within the insurance space. You just need to understand who your avatars are and how to effectively call them out inside your advertising. The next important piece to your creatives is well-written copy. So this is either going to be in the form of image creatives that are well-written in physical text that you're going to see on the image, or it's going to be well-written copy in the form of scripting for video ads, right? And what you want to focus on in your copy, again, tying it back to point 1, is taking your winning hooks and your headlines that you're testing and then iterating them in as many possible variations over the course of all of the ads that you're deploying. So you're going to want to test again for winning hooks, winning headlines, and make as many different creative iterations or one-offs of these winning hooks and these winning headlines as possible. Going into secret number 2. This is going to be how to write your next $100,000 in premium without having to overcome objections on every single sales call. When I came into the insurance space, because yes, I am an insurance agent, when I came into the space, the main focus was you need to be a master at overcoming objections and getting people to give out sensitive information that didn't want to give it out. Because the way in which we went about our process was ridden with unqualified people who either through persuasiveness, being good with your words, you would get them to eventually buy because they were not qualified to begin with. And the sales conversation was full of, I need to think about it. I'm not comfortable giving out that information because they were not a qualified lead. We should not have been speaking with them to begin with. The way in which you circumvent this is through this depiction that I've drawn out here. It starts, again, you're going to see a common theme here with paid traffic. Paid traffic is your starting point. You need to be deploying ad dollars and targeting them in a straight line towards whoever your avatar is. You're going to use those dollars to call out a specific person that is your avatar, where in your messaging, in your advertising, you're going to educate these people, maybe entertain these people, and you're going to get them to then opt into your marketing, right? Once they opt in, there's going to be a process that they follow. So you're going to be nurturing these leads. And then through the nurturing process, it could either be you, it could be an appointment setter, it can be automations that are going to then set a call for you to sit down and for you to talk to them about insurance. You're going to write them an insurance policy on that call. And then that is an infinitely repeatable loop because you then get paid commissions on your insurance policies that you write. You then take those more commissions that you had than you had previously, and then you put them back into advertising dollars. Now you have more throughput going through your system, and you inject as much dollars as you possibly can into your paid traffic system to get an infinite return in commissions on the outside of the system, right? During the advertising process, when you're calling out your avatar, when somebody feels spoken to, like you're talking directly at them in your marketing, they feel understood, like you know what they're going through, and they feel educated, like they have a good grasp on your product or your service, there is very, very little friction for them to opt in to whatever your product or service is. In this case, it's insurance policies. The fact that there's little resistance here, this is going to allow either your setter or your automations, whatever type of process you're using, to then qualify sales calls for you. Since there's little resistance, they're educated on your product, they're more apt to want to sit down and speak with a professional as to somebody that can solve their problem. Think of it like going to the doctors, right? The doctor does not get objections. Nobody goes to the doctor's office with a laundry list full of objections. They're just looking for a prescription. That's effectively what you're going to be doing on your sales calls, is just providing a prescription because you qualified people through the checklist. Like when somebody comes into the doctor's office, they write out all their information on the checklist. They get pre-qualified. They go and sit down patiently. They wait for you because you're the professional, and then you solve their problem. The 5-second miracle here to close deals without having any objections is that qualified people don't object. So if you take this principle and relate it back to the doctor, every single patient that comes into the doctor's office is qualified by nature. They don't have objections. They go in there, they sit patiently, and they wait to be seen because they have a problem that they're looking to be solved. Third piece here. This is where you really take it to scale. This is how to ethically monopolize your space. And I trust that you guys watching this, you're going to use this information for good, and you guys are going to spread great products and great services into the world by understanding how to ethically take over your market, whatever niche that you're in right now. There's only two ways to do this. And the first way is off limits to us. As agents, as agency owners, we are not developing the product. This is developed by other insurance carriers and companies that actually physically provide the insurance. One way in which to do it is to out-innovate or to undercut literally every single competitor until they're out of business. Think something like Apple, right? They haven't taken everybody out of business, but they're effectively a one of one in their space. They've monopolized that space through a unique product that they're delivering. Our way in which we can ethically monopolize our space and take over our niche is to literally outspend with throughput, with ad dollars, every other person in our niche via marketing, via paid traffic. That is it. You have no choice besides becoming the top authority within your niche through whatever marketing channel that you're driving traffic through. Getting into the math problem, I told you guys, I'm going to give you guys a little bit of math. This is a unique math problem. We call it rich math, right? It is the LTV to CAC ratio. Once you crack the code on this number, this is what is going to take your business into the stratosphere. And all you're going to be doing from here on forward is dissecting your book of business, figuring out, hey, how do I optimize my LTV to CAC ratio? In order for you guys to effectively understand this, I'm going to start by breaking down each of these definitions. The first one is your LTV. This is going to be the lifetime value of each of your customers. By definition, LTV is the average monetary value per customer to your business. If we were to sit and look at this as a math problem, it's going to be your average order value multiplied by the average purchase frequency, which is then multiplied by the lifespan of an average customer of yours. If we were to take order value and equate that to life insurance, the easiest way to understand this is that is the premium that they're paying per month. The frequency is also per month because that is the frequency that they're ordering your product at, right? They're paying a monthly subscription effectively to have life insurance. And then let's say based on churn, your average customer is staying for 10 months. Your order value being $100 a month in premium, they're staying for 1 month. That is over the course of the average of 10 months that a customer is staying with your policy. Your LTV is now $1,000. I want to caveat with this. If you're within the first 6 months or so of being in the business, I would not be sitting there trying to figure out your LTV just yet. I would take this equation, I would put it in your back pocket, and I would just look at whatever a customer value is in your business right now. I would take each unique customer and I would just say, how much are they worth to me on average per customer? And all you would do to figure out that math is going to be just taking your total revenue and dividing it by however many customers that you've brought on so far. The second piece to this is going to be your CAC. CAC is going to be the customer acquisition cost. So this is your total expenses divided by the number of new customers that you're bringing in, and this is over a unit of time. So for us as insurance agents or agency owners, examples of this would be for maybe hiring appointment setters or your paid ad budget or any other marketing expenditures that you have in order that are being focused on acquiring new customers. An example that to tie everything together and give you guys some math behind it would be if you bring on a setter, let's say you pay them $2,000 a month. It could either be commission, it can be salary, doesn't matter. That's what they're getting paid per month. That's $2,000. Ad budget, let's say you're spending $3,000 a month in ads, and all of that, the efforts of your setter, right, as well as your ad budget, that brings you in 25 customers per month. You're going to then take the total amount, which is $5,000, divide that by the amount of customers that you brought in, which is 25. Now your CAC is effectively $200. Now what you're going to do is you're going to take the LTV that we solved for as well as the CAC that we solved for, and you're going to express that as a ratio. This ratio, and why we call it rich math, this is the most important piece of lifeline to your business. It's effectively how much it's going to cost you to make more money. If we take the two problems that we just solved, LTV of $1,000, CAC of $200, our LTV to CAC ratio in this example is 5-1. And all of our efforts, every single thing that we're focused on as business owners, as agency owners, is going to be how do I get this 5-1 ratio to a 6, to a 7, to a 10, to a 20, to a 50? How do I keep scaling this ratio as high as I possibly can? Unlimited amounts of wealth are found on the other side of scaling your LTV to CAC ratio to the highest magnitude that you can scale it to. And I'm going to give you guys a couple examples for improving lifetime value, which is the front number of the ratio, as well as decreasing your CAC, which by either improving LTV or decreasing CAC is going to drive the ratio in the direction that you want it to go. The first of three for improving your LTV is going to be increasing the value of what you're offering. The easiest way to do this, let me just explain it like this. As an agent, if you are in, let's say, life insurance, which is the insurance arena that I'm in, there are multiple different verticals of life insurance that you can sell. I started off in the lowest premium per month avenue of life insurance, which is final expense life insurance. People are on fixed incomes. They're typically older. There's not as much perceived value usually. They're normally smaller policies. Again, they're smaller because of budget, because the avenue that you're targeting, the avatar of person, is somebody that is on a fixed income and they need expenses covered when they pass away, right? That's not the only thing that I can sell with that license. You can scale that up by acquiring more advanced market knowledge to sell products that have a higher perceived value to a completely different avatar of person, where they're willing to, maybe instead of spending $50 a month with you, they're now willing to spend $500 a month with you because you've leveled your game up into a more advanced market category of insurance. The next thing is going to be to simply sell more units. There's a couple of different ways where you can do this by taking one customer and selling multiple units through them. A way in which you can do this would be maybe adding on some type of family plan, maybe adding on a different rider, like an accidental rider or some other type of riders that are increasing the value of what the customer is getting, therefore increasing what you're making because you're providing them more value. The last piece here to improve LTV is going to be decreasing how many customers are churning off of your book of business. And the way in which we do this, which is actually a part of our system, is we have an automation sequence that actually helps with client success. So they get monthly reminders every single month that their payment's coming up. And if they have issues with that, they would reach out directly to you as the agent if they had trouble maintaining their current premium. And then you would be able to preemptively solve this, in which would then decrease the amount of customers that are churning out of your book. Getting into the next piece, which is decreasing the cost to acquire a customer. Two ways that you can do this. And you're going to see a common thread here, which has to do with your offer. What are you physically selling somebody? If you can improve your offer by navigating into more of an advanced market product where people want to, this is the key, they want to, you don't have to sell them. They want to pay you more because you improved your offer, so in which they see the value now and want to give you more dollars. That's the number one way. The next way, which we all have control over, which is why you're also here, which is also the common thread of everything that we're talking about, is improving your advertising. This can be in the form of headlines, creatives, copy, everything that we've gone over so far. If you can just simply make better iterations of your advertising, this is going to decrease the amount of resistance that the people watching your stuff have going through your pipeline to ultimately convert to paying customers for your book of business. The common thread among all of these components that we went through, all three secrets, which are, again, how to get clients on demand, writing your next 100K in business without objection, and then dominating your niche and becoming a one of one in your space, is advertising. And particularly because there's multiple forms of advertising, particularly paid traffic, where you can put in X amount of dollars and then you get Y amount of revenue out. It's all math. The more X that you contribute, the more throughput through the fire hydrant, the more water is going to be coming through the system, which is going to get you more revenue on the other side of that. Since you guys have made it this far, and my hopes is that you've gotten value from the training up to this point, please just let me do my job for the next 2 minutes so I can just explain to you what we do here at AdSystems.io. AdSystems.io, this is myself and my co-founder Grant's business. It is a completely done-for-you service that builds out advertising ecosystems. Let me explain to you quickly what we're not. We're not a lead company. We're also not a marketing agency. Not only are we not an agency, but we're actual agents. I want you guys to understand this. We're not some marketing agency that's going to sit on retainer that you guys are going to pay to run ads through different channels. We are actual agents who had problems of our own that we had to solve. We had the lead gen problem. We had automation problems. We had lead nurture problems. We had appointment setting problems. We had closing problems. We had issues with objections. We had issues finding qualified people to actually go through our pipeline that actually wanted to stay on our books and have our products. And we solved all of these issues with inside our own business. And by doing so, collectively have wrote hundreds of thousands of dollars of insurance premium on our personal pen using this exact infrastructure that we build out here at AdSystems.io. And what we do is we take our proven model for turning strangers into customers and we install it into insurance agencies. So with you guys, where you come into play watching this video right now, if you are at all remotely interested in making more money and actually running a system so that this business doesn't run you, there's going to be a button. It's going to be below this video right now. It should be big red button saying book now. Once you click on that link, it's going to then take you to our calendar page where you're going to have the opportunity to speak with myself or my co-founder Grant directly. And since you're going to be speaking with us directly, we can only take on a finite amount of calls. This isn't some fake urgency. We can legitimately only take a finite amount of calls per week because we have very high level operational tasks to complete within inside our own business on a daily basis. So we're carving out our time away from running our business to meet with you guys to have conversations about your business and how we can assist you here at AdSystems.io. So again, I encourage you, there's going to be a red button. It's going to say book now below this video. Click the button, go to our calendar, book a time that works for you, and we will gladly have a conversation on how we can add value to your agency.